Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and girls. So let's take a look again on the forex market. Actually, today is a different question what to consider, because on Great British Pound, as we said, market is coming to the possible bread and butter buy. As you can see, the first close below 3x3 we already have cut, so it also makes sense to keep an eye on it. But since we mostly are dealing with the euro currency, so let's keep going with the euro currency. So in general, market, recent action confirms that our worries and doubts yesterday concerning the performance of the market was not in vain. As you can see, indeed, market has dropped a bit lower. So here is a few reasons for that. First is somehow the common opinion currently that, Fed rhetoric might be adjusted in the nearest meeting. It might be a bit more hawkish, and investors somehow have decided that it should be some preparation for this a bit more hawkish view. That has triggered the overall downside reaction on dollar rivals, on the euro currency and other markets. But this is only the half of the story. Second half is coming from the geopolitical tensions, as you know, which also are not friend to financial markets, mostly. From the cross-market analysis, we already said about the dollar index that suggested a bit deeper retracement. Currently, it seems that the 618 level might be reached. Here is 96 area approximately. So mostly dollar index and euro currency stands in an equal position. So here, just some minor distance to the 618 level, as you will see later on the euro currency, the same story, minor distance to this level. Second moment on the cross-market analysis, take a look at the interest rates. They have just jumped again and are coming to the next 191 target. Currently, it already stands 188. So it's very small distance to the target. And this performance on the high interest rates just indicates the anticipation of the changing of the Fed rhetoric. It's more aggressive view, which also supports the dollar index bounce and the interest rates performance. That, of course, works like the headwind for the euro currency and makes it moving lower. At the same time, why I think that geopolitical tensions also take place here is just because take a look at the gold market. The gold market hasn't dropped so significantly as the forex market. Actually, it has turned up yesterday, as we suggested. Currently, it's a question whether it will be a long-term pullback or just minor reaction on the support. But anyway, it doesn't stand as depressed as forex market in particular. So this is two moments. And finally, currently, as you know, is earnings report from the companies. And more important for forex market, as you understand, this is the bank reports. And based on the recent reports, so everybody shows the good earnings results, the major banks, big whales, but at the same time, they review the future revenues and review future results to the downside, which is, not really very supportive and indicates that investors expect that it will be a bit more difficult year than the previous one. So currently, in general, stock market stands under pressure. So all the stuff together explains, in general, the performance that we see on the euro currency. But at the same time, currently, despite the recent strong sell-off, although it has increased the chances of the downward continuation, which actually you know that it is our basis scenario in the longer term, it hasn't crushed yet the bullish short-term context by far. So here we haven't got any bullish grabber stuff, unfortunately, with this recent drop. I have checked on the futures market as well. We do not have the grabber here. But market stands still at the major support area. Actually, it stands currently at the vital area where market has to turn up if it indeed stands bullish and keep chance to go higher, or it will be collapsed and our continuation taken out of these lows, because it just tells you that this retracement is over and we should be prepared for a downward drop. what we have discussed actually in the weekly report on the higher time frames, in particular on the monthly chart. So that's why here our task till the end of the week is to see what will happen around major support. And if we will get some bullish patterns, we theoretically could try to use it, because currently risk is very small, because actually market already stands at an invalidation point or very close to it. So on the 4-hour time frame chart, you could see that market with this drop recently has broken through the all support areas that we have, which is negative sign, I suppose. Because recall our discussion, what we said is that this is class for major support. This was two confluence and natural support area. And we said if market is bullish, it should not break it down. So if just market has crushed all the confluence supports, what the chances that just a single support will hold price from the bearish performance? Of course, chances for that stands lower. And although currently we see the bounce from the next support area that we discussed at the 50% level, trend line support, the sell-off tells that overall situation stands not in favor of the bulls. So currently it means that this is in an area of the 113, 113.30 that we should closely keep an eye on. So in particular speaking, if you take a look at the hourly chart, you will see that with this downward action, market hasn't quite reached the XOP target yet. That actually agrees with the major 618 support. At the same time, that dollar index also hasn't quite reached the 618 level. So there stands, as I said, in equal position. That's why with this strong sell-off, I suppose that the chance to reach the XOP now looks very probable. And one of the patterns that we could get is, of course, the head and shoulders. So take a look that market will reach the 1618 extension. Yes, somewhere slightly higher. So to match this ratio, somewhere around 34.50 probably. Market could try to go lower again. So as you can see, 1618 in this case will coincide with the XOP. And one of the patterns that might be formed, it could be the head and shoulders. Maybe a butterfly also will be some kind of the part of the head and shoulders. But that is the major pattern that we intend to keep an eye on here. If it will be formed, we will try to use it for taking the maybe long position, because risk will be, as I said, 25-30 pips. It's in general acceptable for the pain no gain situation. So that's actually the one thing that we could wait on euro currency. I do not see any other interesting setup. Maybe if you're trading on the very low time frames, on the 15-minute chart and 30-minute chart, here you could find some setup, maybe as a brand body sell or something of that kind. Very short-term apple pattern, because here it seems that thrust is not bad actually. It's one thing that also you could consider. But in general, for us, this 13 area is more important, and we need to keep an eye on what will happen around it.